Hi,
So
welcome.
much for joining us today.
Thanks.
Amazing. Fabulous. So you should be able to take host privileges if you need as well, if you want to do any sort of screen sharing. That's totally fine.
Okay, yeah,
but-
great. I'm gonna share my presentation.
Fabulous.
Okay. Can everyone see this?
Yep.
Okay, great. So this is called Problems with Bitcoin and How to Fix Them. I think it's a subject that a lot of people haven't been touching on enough because people are excited. Of course, you see the price of Bitcoin go up 5% instantly. That's pretty cool. But there's a lot of hard work that needs to be done to fix some of these challenges before it's ready for what we want it to be, right? Money for the internet and for the world.
Absolutely.
So a little bit about me. I have an economics degree and an MBA. I've worked in automated trading systems in commodities and stocks, and been in the Bitcoin space for a decade now. I've talked at a number of different conferences and meetups around the world. So the first issue is privacy, right? Bitcoin, when you just use it by default, is not sufficiently private. When you use cash, right, there's not a record being recorded of this. When you tell someone to send money to your bank account, or you send money from your bank account, while the transaction itself isn't private, right, the person who's receiving the money from you or sending money to your bank account doesn't know how much you have in your bank account or your transaction history from your bank account, that kind of thing. And when you do that layer one Bitcoin transaction, every transaction is public and permanent. So even if nobody's looking at it or understanding what it means now, they can always go back later and then try to piece it together, right? There's chain analysis where you're looking at the blockchain for these network of transactions for the meeting, and then there's monitoring the internet network where you're looking at IP addresses, access to blockchain explorers and so on to try to get additional information, as well as getting data from KYC exchanges. So then you can learn the social network, salaries, wealth, political preferences, right, location of people as well, and that can be used against people in a lot of different ways they didn't anticipate. People like to say, oh, if I have nothing to hide, why do I need privacy? But let's say you're trying to negotiate a raise or negotiate a good price on a car. You won't be able to get what you want or get the best possible deal if the counterparty knows exactly how much money you have, and so on. So what are the solutions? The Lightning Network does add some privacy, even though it's not built to be a private network. The Liquid network is the layer of Bitcoin that has significantly more privacy by default. Tor allows you to at least hide a IP address when generating transactions. CoinJoin helps hide the the coin history, and Taproot is an upgrade that's in underway that does multiple things, but will also help with privacy as well. Scalability. So famously, Bitcoin can only do 7 transactions per second on layer 1. It's not enough for everyone to use for all their routine purchases. It's not even enough for a small city to buy their morning coffee. However, so there's a couple things. Well, one is that a Bitcoin transaction can actually be a lot more than A pays B, right? Alice pays Bob. It could represent many people paying many people, or the opening of Lightning channels, and as well as other things at the same time. So we have a number of scalability solutions. People have been really focused on this, since 2017 when the congestion, manifested itself initially. We have the Lightning Network, Liquid Network. Although it's not popular to say, off-chain and custodial. When people, send, within an exchange between users or between exchanges that might have a agreement with each other, it doesn't necessarily go to the Bitcoin blockchain. and also open dimes or physical ways you can move the private keys of Bitcoin for small amounts. And one of the biggest things has been batching. When a lot of exchanges implemented batching, if they're doing any entity that's doing large amounts of Bitcoin transactions, if they combine different people's transactions together, it's just much more efficient, and it will only get more efficient with some of the upgrades to the Bitcoin protocol that are coming as well. Fee variability. So when transactions increase, the transaction fees go up sharply, and they don't go up a little bit, right? They don't go up, from $1 to $2. They go from 1 penny to $100, right? And then when the mempool is empty, when very few people are doing transactions, the fees are too low to support the Bitcoin network security in the long term because of the halvings. The Bitcoin network security is currently being subsidized by the production of new Bitcoin. But every 4 years, new Bitcoin being produced gets cut in half and eventually will become zero. So the security of the network, basically to pay for the miners to keep finding blocks, has to be based on fees. So while there is enough people who want to pay fees, the issue is that the fees have this tendency to go between too low and too high. And that could make the network unstable, where a lot of blocks are all found at once and then no blocks are found for a while, or blocks are found at a very low rate. There hasn't been as much attention paid to this, but it is important. Fortunately, we do have some more time because the Bitcoin price has increased enough that it's more than offset the halvings, giving us significantly more security despite less Bitcoin being produced. So a couple of solutions to this could be, increasing or maintaining minimum propagation fees between nodes, that nodes will not relay very low fee transactions, or simply miners not mining very low fee transactions, so people are forced to have a higher floor even when there's less demand for transactions, and also having like a higher dust limit potentially, where people can't make as tiny transactions as they might like. You also want to encourage more routine, non-speculative usage of the Bitcoin network, right? You can tell there's people who are buying Bitcoin hoping that it will go up in price, right? But there's plenty of other uses where people are using it as a savings or moving Bitcoin and as a payment. And the more you have of that, the more stable the fees will be. Also, consolidation transactions in low fee periods, doing things like coin join, bringing together what would otherwise be dust, or and that kind of thing, opening or closing lightning channels. Those can be done in low fee periods, which will help smooth out the fee curve. There's also even more radical solutions, like changing the way fees are paid to miners, like smoothing it out over a number of blocks. Those are pretty unlikely to happen though. Complexity. So Bitcoin's complicated. It takes a long time to learn. It touches on so many different fields. And there's not really a way around this, right? Bitcoin is not going to get simpler. It's just going to get more familiar. So solutions, right? We need better educational materials. We need to encourage schools to teach some of these basic elements that would make it easier to understand Bitcoin, like information security, computer science, economics, game theory, cryptography, and so on. Have physical locations for people to learn specifically about Bitcoin. More routine use in society, right? If you think about, when cashiers at a grocery store are giving complicated change, when you have pennies and dimes and nickels and quarters, that's fairly complicated, but people just get used to it, right? So as Bitcoin becomes more routinely used, people won't think about some of those complexities as much. It will just become normal. And then finally, emphasize the fact that people only need to learn the components necessary for them, right? So not every single person, even though they might be curious, needs to learn about how mining works, or how the network propagates transactions how chain analysis works. They might just need to know certain things about, where, how to buy and sell and move Bitcoin, how to store the private keys for Bitcoin properly. So volatility, right? Price of Bitcoin varies sharply. This makes commerce and savings more difficult. It's good for traders and it's bad for everyone else. So the price fluctuations also create tax problems in many jurisdictions, where you could potentially owe, significant capital gains taxes from routine transactions. So what are solutions? Hedging, right? You can use a futures product to try to offset the risk, price risk. You can buy put options, right? Those are a kind of derivative that pays off. It's like insurance if the price goes down. You could potentially do synthetic stable coins on Bitcoin. People are working on building this out now, where you would have a stable coin that's collateralized by Bitcoin, or Bitcoin in conjunction with like a decentralized derivative that helps stabilize its price to a degree. Auto converting to fiat stable coins. What we've seen, since 2013 is a lot of merchants that accepted Bitcoin and wish to automatically convert to their local currency, so they don't have to worry about the price risk after accepting the payment. It's important, especially if they have a low margin. Pricing everything in Bitcoin, circular economy. If you get to the point where everybody is using Bitcoin for everything, it becomes a lot easier to manage the volatility, because people will start to ignore the volatility, right? The volatility is fluctuation with respect to other currencies. And as you use those other currencies less and Bitcoin more, the volatility becomes more tolerable, or even seems to almost disappear, right? And then finally, it would be nice if we get some tax reform, a de minimis exemption, so you don't have to pay capital gains or on amounts below a certain amount. Legal tender laws like El Salvador gets rid of a lot of the tax problems by making it not taxable event. And fungibility. So one Bitcoin is not necessarily the same as another Bitcoin, right? If you lend somebody $10 bill, and then the next day they give you a $10 bill, you're not worried about if it's the same $10 bill, and if it's a higher or lower quality one, as long as it's still usable. You want Bitcoin to have this property, but unfortunately it doesn't as well as we would like, right? People don't often worry about like what Bitcoin they're getting, but in some cases they do, and in some cases they're different. And this ties into the privacy as well. So it's a lot harder to use Bitcoin as money when people are saying, well, are these bad Bitcoins, or are they, split into, too many tiny UTXOs? And are they SegWit, or are they legacy, or are they Taproot, and that kind of thing. We've had all these different formats for storing Bitcoin. So what we can do with that is get everyone to move everything over to Taproot, right? That's the newest, latest, and greatest standard. So instead of people being spread out of all different ones, get people to use that one. Get the wallets to standardize the transaction formats. Right now, different wallets create transactions in different arbitrary ways that gives them distinct signatures. Use CoinJoin and PayJoin to decrease visibility of coin history. Those are opt-in privacy techniques. And security of private keys, right? It's hard to store a private key seed phrase securely. If you think about that, there's a guy, Didi, who was, sold everything for Bitcoin and was traveling around in a van. And then it's like, okay, well, if you're traveling around in a van with all your money in Bitcoin, then where do you keep the private keys, right? Kind of an issue when he's going between different countries. So, simply viewing the secret could allow a theft at a later time. If somebody sees your private keys but doesn't, take them, they're just making a copy basically, then they would be able to steal from you at a later point, which is, makes it harder to guard against theft, right? Because you don't immediately know that a problem has occurred. It's hard to get hardware wallets with a clear chain of custody. You don't want to buy them from a third party. Even online, you don't know if they were intercepted or modified along the way. People have received fake ledger wallets in the mail. Safety deposit boxes can be stolen or confiscated. It's rare, but it happens. Keeping private keys at home is vulnerable to thieves or anybody that's in your home that you don't trust, like a guest. And keeping private keys in a computer hot wallet is vulnerable to malware and hackers. So solutions, right? I'm sure you can think of some other ones as well, but get hardware wallets directly from the manufacturer at physical locations, either where they're producing it or at trade shows, conferences, and onboarding locations. Use Linux and other secure systems, right? And make sure those systems, if they're being used for Bitcoin transactions, they're not also being used for other questionable activities. And use multi-sig properly. Like, for example, Casa is one of the companies that makes a multi-sig product that is a little bit more forgiving, that the individual could lose a private key and still maintain access to their funds. And when you use multi-sig properly, then it makes it much harder for an adversary to get enough keys that could be in different locations and stored in different ways to be able to steal funds. And then finally, the onboarding problem, right? How does a new person to Bitcoin actually learn about this, figure it out, and try to see who and what sources they should be trusting? It's unfortunate there's a lot of educators that want to promote a trading strategy or a questionable altcoin, or just trying to exploit the situation to make money for themselves. So I think what we need is local physical learning centers in every city that people can walk in and talk to somebody face to face. Learning from trusted family, friends, social groups, right? As Bitcoin spreads, then every social group will have at least one person who they trust, who understands this just to a degree enough to help onboard them. And we already have courses from well-established universities like MIT and so on that have really good content for helping people learn there. So yeah, I'm going to open up to questions now.
Yeah, fabulous. I've got a couple quick questions. So my first question would be, I guess, do you see Bitcoin really becoming a currency that is used for someone to, say, buy a cup of coffee or something in one day? Or do you think it's more likely that we're going to have these derivatives which use Bitcoin as a store of value, so that there actually is a lot less Bitcoin moving around, people just kind of basically using it as collateral with things like other tokens or other kinds of stable coins, as you were mentioning previously, that are kind of like linked to value that is stored and more, I guess, sedentary in a way?
Yeah, so in 2013, 2014, I was trying to get local businesses and so on to accept Bitcoin. I did actually go to a bar in New York City that that accepted Bitcoin for food and drink. But then I realized that that you have the scalability issue, and that maybe it would be better suited for digital gold and in large vaults and so on. I was concerned because I did want actually a way for people to be able to pay for it for everything as well. And I think now it is possible, with the Lightning Network. You see in El Salvador, people can literally buy Bitcoin via the Lightning Network at Starbucks. They can buy coffee with their Bitcoin, and it's scalable and it works. But I do think that there's a case for, if you make like synthetic assets on Bitcoin, that you can do something that has never been done before, where instead of somebody just buying a bunch of Bitcoin, they could buy some Bitcoin, but then they're creating a synthetic portfolio from that Bitcoin. So they have basically synthetic gold, synthetic stocks, synthetic bonds, all wrapped together, right? Synthetic stable coin, different fiat stable coins in there. And then they can basically spend from this instantly and in tiny amounts. So there is no distinction between like their long-term savings and investment versus their spending. It could all be kept in the same kind of thing, and it gives them a lot of protection against fluctuations. Because even though Bitcoin may be a bit less volatile, as people understand it better, as more big investors are willing to just step in when it drops instead of panicking and thinking it's dead. Because of the extremely fixed supply, more than any other commodity, it's hard to imagine that the volatility would ever be less than even something like gold, which gold fluctuates, right? And if the price of gold goes very high, it incentivizes people to find more of it. Whereas with Bitcoin, there's no release valve, right? If the price of Bitcoin goes high, people can't actually go necessarily get more of it anywhere.
Yeah.
And that can, so you can have that extreme volatility upside and the downside that I don't think necessarily will ever go away. So it may make sense for people to create these synthetic portfolios for their savings and spending. It also, there actually may be a case for governments to basically issue their own fiat currency off of Bitcoin Reserve. I'd love to see that and see how that would look like. And of course, the nice thing about that is the reserve is much more provable, right? Like the U.S. was on a gold standard, for many years, but you couldn't really audit it, right? They don't let you into Fort Knox to go look at gold. They're not going to go let me melt down the gold. And okay, now I'm comfortable that these are there. Whereas with Bitcoin reserves, you can actually prove the reserves are there and are valid very easily, and in all the time on a daily basis without an issue.
Absolutely. So one of the other things which, maybe you consciously omitted it from your presentation, but I was discussing with a few friends of mine who are still sort of skeptical about Bitcoin. And one of the biggest arguments that I'm hearing from people is this issue of its power consumption. So what case would you make to people that come to you and say Bitcoin is terrible simply because it's using so much power?
Oh, yeah. No, I'm glad you mentioned that. And yeah, the reason I didn't include it is I don't think it's an actual problem, just a perceived problem. So that maybe I need another slide for the PR issues and just the fact that sometimes someone learning about Bitcoin isn't starting from 0, they're starting from -10. I'm still immersed in the Bitcoin space, that it was a shock to me to go to a very large house party a few weeks back, where it was all people who are just doctors, lawyers, accountants, and they don't think about this at all. And then they're like, but isn't Bitcoin using too much energy? And I'm like, oh, can you sit down? This is a long conversation, but basically Bitcoin uses energy. It has to use energy, but the energy is for the network. So the good thing is that right now the energy usage is in excess of the functional value of the network because of the block reward. But the nice thing is the block reward is getting cut in half, which means that, again, I'm going back to, right, you can see it as the fee problem, or you can see it as you can see it as a good thing, that it's not going to consume energy in excess of people's use of it. It's just a matter of time for that to happen, but that also means that people's usage of it needs to step up enough that the network will continue to be stable. Not guaranteed to work, but I think it will. So the good thing is that you can create more and more value, right, without increasing the power consumption. So basically you can, with stuff like the Lightning Network, you can have more and more Lightning transactions, for more and more routine purchases, and the energy consumption doesn't change. So if people want to decrease the energy usage per transaction, the best thing they can do is get more transactions to happen. They encourage more transactions, then that improves that metric. But trying to get people to use less energy doesn't work, actually. You can't do that, because even if you shut down mining in one area, then it incentivizes people to mine more in other areas.
Exactly.
So, and then the other thing is, if you want to, there's nothing that says the energy being used doesn't have to be super clean. I would like it to be clean, right? I would like it to be geothermal, hydro, nuclear, wind, solar, and maybe someday nuclear fusion. That would be ideal. And then the best way to shut down all the coal power plants and so on would be to just simply make it uneconomical. If you can mine very, very cheaply with clean sources, or even subsidized clean sources, then you basically make it uneconomical to mine with any other sources.
100%.
Yeah. The e-waste. Yeah, e-waste is unfortunate. I mean, again, right, everything else in our society uses energy, creates e-waste. What's interesting is that since ASICs are pretty mature now, there's less e-waste than there used to be. People are still using miners from several years ago. And several years ago, they thought the lifetime of the miner would only be like 1 year. So it's kind of interesting to see, maybe that's, maybe that's just slowed down permanently, right? That there's not that much more radically you can improve the ASIC chips so that you don't need to get rid of them on such a tight time schedule. But ultimately, again, there's some stuff that is, has a cost, but it's a matter of, do you think it's worth it, right? Like a Brinks truck uses a lot more gasoline than a Prius, right? But you can't just stack all your gold bars into the back of a Prius and be like, hey, we're being more efficient, right? Because it doesn't do the same task. There is a certain cost to security. Here's someone posted in the chat. 70% of the energy is green energy. It's, that's an estimate, right? So, and of course that also shifts depending on the time of the year. It depends on, because of hydroelectric. It can vary based on the rainy season. It changes. It's been changing dramatically because of certain countries banning mining and other countries ramping it up. So it's definitely a significant percentage, because one of the best things that Bitcoin can do is get stranded energy, hydroelectric. The other thing is Bitcoin also can help with prevent methane flaring and methane venting, and then that also benefits the environment, but it's a bit complicated to analyze. Yeah, Azir says, yeah, one Bitcoin transaction is like throwing away 20 iPhones. I don't think that makes sense. I think people, it's very easy for people to write articles that really don't make any sense and of interesting, easy to remember and say factoids, but
yeah, 100%. I guess the last question from me, the second point that I hear most commonly is the aspect of centralization. And I think my friends think they're really smart when they come to me and start talking to me about this, because they say, oh, Bitcoin is touted as this decentralized sort of assets, but where in fact there's like 5 or maybe even 7 big sort of mining operations which are in control of the Bitcoin mining for the most part. And so therefore, inherently, there is actually an aspect of centralization that's taking place. I wonder if you could just sort of like extrapolate that a little bit.
Sure. Yeah. So sometimes people confuse miners with mining pools. So because of the structure of mining and what's called variance, the stable number of mining pools, large mining pools might be somewhere like 10 or 20. And you do have some large mining pools with a lot of the hash rate. What you don't want to see is any mining pool with more than 50% of the hash rate at any point. So the mining pools have a lot of other miners joining them, potentially from around the world. So while they do have a certain degree of influence over the blocks they create and so on, they don't have control over the protocol. They don't have the ability to steal anybody's Bitcoins. At best, they could do an attack on the network that would really only end up costing themselves a staggering amount of money. And when mining pools have gotten too big or have misbehaved, a lot of other miners have reallocated their hash power away from them, and that can be done in 1 hour, basically. Like gigahash.io was getting over 40% of the hash rate a number of years ago, and everybody reallocated their hash rate away from it, and they don't exist anymore. They went from people to they would control the whole network to they're not a thing. They're not even in they're not in the list of miners. The other thing is we saw a case in 2017 where 90% of the hash rate wanted a change in Bitcoin and they could not get it. So there's other stakeholders. There's the miners, there's developers, there's users, there's investors, there node owners and so on, exchanges and businesses, and they all have a degree of influence over the network, but nobody has the full control over that. But there's
Yeah.
also some interesting proposals to help decentralize mining further. Stratum B2 would allow the individual miners of a mining pool to be able to make their own choices about which transactions to include or exclude, which would be fantastic. And then there's a early stage proposal that's being developed right now. There's an early stage proposal, Braid Pool by Bob McElrath, which would allow like a decentralized mining pool. But it's going to be very hard to build. If it gets built, it'll take a lot of time. It allow basically a pool that's not run by anybody.